entries here. Fast trend, can you see? Why is this so important? Because guys, you have to be able to identify this, because imagine you identify it wrong and you identify it as a slow trend environment. Guys, it's not going to come back. It's not going to come back. You're just going to be sitting there. You ain't going to get in the trade, okay? This is why it's so important to identify the rhythm. It's almost like what a market condition within a market condition. It's a type of imbalance. It's just, I cannot stress this enough, because like I said, and I'm going to repeat the point, we'll do it together on the chart. If the market is doing that, why would you be waiting there? Guys, you ain't going to get a trade that day, okay? If the market's doing that and you're trying to take trades here, fine, you might have to take a trade there and get a little bit of drawdown and then go up. But where's probability? Here. Distribution is building value here in this 1.5 region. What does that do? Shifts the probabilities in your favor. Guys, this is probability trading. This is high probability trading. You know, and it's really important, right? You hear about this all the time. Guys talk about, got to be able to identify high probability. They don't have a clue what they're talking about. This is high probability. I'm showing you, backed up by statistics, real market orders, people buying and selling. And I'm just showing you how you get profile shifts, right? Obviously, the high probability is going to be where the transactions are taking place. You don't even need to look at this, right? If the price of an item on eBay suddenly jumps £200-300, and that's where it trades for the next month. So, you know, we talked about iPhones a lot. Say they're £1,000 in January. Whatever reason, Apple has a shortage, whatever, they jump to £1,200. And in February, they're constantly trading at £1,200. Guys, you can sit there and try getting this thing at 1,000. You're not going to get it. You're just going to miss out. It's exactly what's happening here. You've got to understand where are the market transactions taking place. It's changed. This is why the VWAP is crucial, and why I say don't treat it as an indicator. You've got to almost think of it from a abstract, intangible perspective. Don't think of it as a line. Almost, I know it sounds crazy, but almost try to be the VWAP. Try to be one with it, and almost understand how these market orders are developing and what is it trying to tell you. And I understand you're not going to get that in one section. You can see why this thing is difficult, why you know, and I'm being frank with you. You've paid for professional education, professional advice. I've got to give you the truth. That's why the failure rate is so high, because people find this difficult. I know it's difficult, but I do believe a lot of that is because they don't understand it properly, A, and B, they don't give it the observation time needed. You know, it's going to take you time. You're going to have to look at 1,000 charts. I'm not going to lie to you. You have to keep looking. It's going to drive you nuts. You're going to be, oh, I don't get this. I do get it. I don't know. Yes, no. It's going to be all over the place until it just clicks. Then you'll be like, oh, I get it now. I understand as the volume profile's building. Because what it is, you know, I don't want you to think I'm just talking for the sake of it. It's not. When I'm trading, you're going to see this on my chart. Initially, when I introduce you to VWAP, I'm not going to have this because it's going to be too confusing for me to show you composite profile, VWAP developing as we combine it with the balance and imbalance condition on composite profile. That's already two different perspectives of value: intraday dynamic value and static value of the past few days. I'm combining. It's going to be too much if I start to also introduce this. But as you'll see, I very much look at all the VWAPs: day, week, month, quarter, yearly, etc. I look at composite profiles. I look at weekly, monthly volume profile, and I look at daily profiles. So I'm looking at so many things, but that's because I understand the evolution. And what it is I like to use this in combination with this. And that, my point is, the reason I'm telling you all of this is because I want you to understand it's a process. You're going to have to develop. As you see this thing forming, There's no book, there's no me, there's no one who can tell you, guys, this is what happens when this happens. No, you're going to have to observe it. You're going to become, I hope you can see I'm taking you 95% of the way there. I'm giving you the understanding, the tools, everything you need. But that extra bit of understanding, I can't give you that. You have to observe it. You have to watch this profile of nothing and then build more, and watch how the shape of VWAP and the bands change as the profile changes, etc. Oh yeah, rhythms changed. I'm going to do this. I'm going to do that. Do you see? It's so dynamic. The market is incredibly dynamic, and it's changing all the time. And this is why I always say to people, you know, the market will give you clues even after you enter a trade. You're never going to be successful thinking this is the perfect entry and this is where I exit, and no, it's not going to work. You know, I've said this before many times, and we'll talk about this. Don't worry, it's the last thing I'm going to say is where people set targets, right? Imagine we have just a normal sort of trend, right? And you've got your target up here. Then suddenly there's a shift and the market starts to do that, right? And the rhythm goes from a normal to a fast. You know, you've got to make a decision. Actually, let me move my target higher because market's telling me it's about to go exponential. I'm getting loads of volume being built here. You see, it's very dynamic. Whereas when you entered, did you know this was going to happen? This is why it's ludicrous when people say to you, you know, have fixed targets when you're trading value like this. You're going to learn to become a really, really good investor or a trader if you can give yourself the time you need to observe this. So I thought I just wanted to say that because I didn't want people to look at it. I know the pace has been really fast and it's been a lot of stuff in the last two, the theory section and then this, where I know a lot of you might have been like overwhelmed, and I just want to give you, you know, a little bit of heart and a little bit of confidence that look, don't worry, it's going to take time to develop, but if you do it properly, the opportunity is amazing. So, you know, I think enough said about that. You know, we'll see how you develop obviously over the next few months applying this stuff. There's obviously still a bit left of the pro course, so you know, we can talk about that later. So what I want to do is I just want to talk to you about very briefly different essentially, I call them market conditions obviously, but within days, investors typically call them day types, but you can apply it to weekly, monthly. That's why I don't like that word day types, but fine, I'll use the word because it's what's used in institutional circles. But just remember, just because I say day type doesn't mean it doesn't apply to week, month, year, quarter, year, etc. So let's go and look at these day types and it'll become clear what I'm talking about. Okay, so look, again, just only because I've told you it's a day, do you know this is a day type. Remember, this could be, you know, week, month, quarter, year type. You'll see when we go to look at weekly VWAP, monthly, quarterly, yearly, etc. It's exactly the same. You know, we're going to have balance, we're going to have imbalance. So we've already covered balance and imbalance, right? Balance and imbalance are very different. What I want you to do now is, and again, don't worry, I'm going to summarize this for you. I've got a table which is on the final slide of this that I want you to print out when you're doing this. I want you to get on the charts, which we're going to do together now anyway, and we start identifying these types. Okay, we'll call them day types for now, but they're not, because it's important when we go to weekly, monthly, quarterly, yearly. I told you you're going to be doing exactly the same thing. Okay, and obviously I'm not going to keep covering the same thing again and again. When we go to weekly VWAP, I'm going to say, guys, weekly VWAP is imbalanced. It's got a fast trend or it's got a slow trend imbalance. Because I've already talked about it in the day, I'm just going to apply it to the week and just assume you got it. But the point is that, look, the types of day types I want you to identify really are, these are the main ones that I think most institutional guys that I knew, you'll see in the books, they have loads, and honestly, It's a load of rubbish. I mean, end of the day, you know, if you're going to start confusing yourself, if you look for very specific types, it's very broad, okay? It's very rough. Just have the basic types and you'll do fine. And you'll see what I mean by this, okay? Because really the market can only do four things. That's what I've done here. Yeah, there's variations of this, and like I say, I see it in books where people try to get too, you know, accurate with these type of things. And problem with that is when something that you're too accurate and it doesn't happen, either it just causes you to freeze and you don't take the opportunity that's occurring, or you just don't recognize it because you're so obsessed with, no, the book told me that. Guys, let's keep it basic, and you'll see why I say that. Just stick to these four base types, and let's see in this task if you can identify them. So balance and imbalance, I want you to identify those. You can do them. But what it is there's also reversal. And reversal is essentially starts off as an imbalance, okay? It's an extension. Can you see imbalance? Look. So very much the market was imbalanced, right? We just talked about this. It's above. The rhythm changed. It went from a slow imbalance to quite a fast imbalance, right? So this is actually a really good example of a fast imbalance. Can you see here? I want you to identify these type of things. Just get used to it. Rhythm of the imbalance, rhythm of the balance. We talked about it, second standard deviation. So here you would say, oh, I see, yeah, what Envy's saying. We kind of started off as a, you know, a slow imbalance. Then we shifted gears and we went to fast imbalance. But the point is this type. What happened? Can you see something changed, essentially? See the rhythm changed here? Look. Started to fail. We didn't know, right? It could have just continued as a, could have just shifted and gone to what? More of a normal trend, the first standard deviation, but it didn't. It broke aggressively. You can see how aggressively it broke. Guys, obviously the market recognizes. So you saw a ton of sales coming in. And when I've got you watching order flow, you'll see on the depth of market or on the cumulative delta, it would just go whoosh. A lot of people got stopped out or exited here, algos or whatever. The point is not that. It's a reversal day, okay? Reversal week or whatever you want to call it. What that means is that the imbalance is changed, and we've essentially gone from an imbalance, right, market, balanced market, to a balanced market. Look, see that? Imbalance to balance. Can you see that? So that's all reversal day is. In the books, they'll come out with all these 15 different sort of variations. It's all nonsense. It's basically, keep it simple, in my opinion. Okay, it's worked for me my whole career, is because what it is, it keeps me loose enough to think about things when things aren't perfectly fitted. It's okay, it's loose. I can use a loose variation of it. So I hope that one's clear. So I want you to start to identify where the imbalance breaks down, essentially. So we're imbalanced for the day. Okay, see, it's very rough. I don't care about this being very accurate. It's rough. We had a fast trend imbalance. Something changed. Yeah. So the way that, and we'll come much more onto this, the way that this can be traded is, obviously, if you recognize something has changed, probably in this region, because we built some value and then essentially, you know, here, would have built a little bit of value and we broke. You can either just exit your long, or you can get short here. Okay, and I've got names for these. We'll come back to those, but I just want you to recognize that the trading opportunities are long, 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 maybe get stopped out, do nothing, recognize it breaks, and we're going into a reversal day. Oh, we might be going back into balance, so you get short here into a balance environment. Take the trade back to VWAP. I talked a bit about this, taking the trade back to the point of control in the composites. What it is we're gonna very much combine this. So you might have a multi-day composite with your contextual levels that you've been drawing. Okay, so you can see you can have huge confluence here as it breaks. You're coming inside static composite, and don't worry, we're going to talk a lot about this when we combine the two things you've been doing at the end of stage one, and obviously here you're doing in this task. Combine it all and you'll see the power of different investor perspectives, because remember, this is a day perspective. You know, algos, whatever, are doing this. These are going to be longer term investors who see opportunity as we come back into composite value, right? Into this composite value, and we can combine the two. So, you know, all investors are now on the same page, and we'll talk more about this. That's where you identify opportunity, and that's true confluence. So look, I've talked a lot about reversal, where we're going from imbalance to balance, right? What about the other way around, where we go from balance to imbalance? Okay, guys, you've heard this term breakout. Guys, forget about all these head and shoulder breakouts and this rubbish. This is true breakout, basically, where you're going from balance to imbalance, right? Obviously, at some stage, the market has to transition. We talked a lot about this, from balance to imbalance. So essentially, think about it. So early in the morning, right, you're going to say, yeah, we've got this kind of rhythm here and market condition, which is what? Balance, right? But hang on, what's happened here? We've broken down. So here you would be doing what? Fading the market, 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 right? Usual balance. Here you might have faded the market, and then in this region, can you see we're building a lot of value? So you might have got stopped out or whatever. You see, this isn't normal. We're building so much value here. Where? In the first standard deviation. So what's happening is what? Rather than maintaining a balanced profile, look, can you see we're starting to build out volume here? This is the standard deviation, 1SD. Can you see it there? Got to be able to identify this. Hang on, something's changed here. Something is changing. Because you see here, when we came up, we didn't continue to build volume here, did we? We came back very quickly. As I showed you in the depth of market, how we trade mean reversion, we mean reverted. But you see, every time we tried to mean revert, failed. Mean revert, failed. And actually built volume. As soon as we came out of this region, boom, the market just collapsed. Okay, so that's a proper breakout where you go from balance to imbalance. And at the end of the day, you've got obviously two things you can be doing here, and that is, you know, as with here, where you can exit your imbalance trade, here you can exit your fade trade. You know, you might have tried to fade it here, and then you recognize, all right, I'm in trouble here. Take the stop, and then try to either just call it a day, or obviously try to get in when you identify that we've essentially gone imbalanced and we've got a breakout. Okay, so you know, guys, those are the day types, and like I said, I'm going to show you in a second. On the next slide, you've got the everything summarized for you. But essentially, what I want you to do now, we're going to do it together. I think this has gone on long enough, so I'll probably do this as a slightly separate section. Is I'm going to get on the charts. I don't know which market yet, maybe a bit of both, maybe just one. And together, we're going to identify all of this stuff. So we're going to identify, obviously, balance, imbalance, reversal, breakout. But then also we're going to identify the rhythm, right? So for balance, it could be first or second standard deviation, obviously, with the balance rhythm. And then with the imbalance rhythm, straightforward, right? We're just going to do the slow trend, which is either like it's building value above VWAP or the 0.5 standard deviation, or it's building value in a normal trend above the first standard deviation, and or a fast trend where obviously we're building value at a much quicker pace, right? So the VWAP is quite steep, normal trend is fairly decent, and a slow trend will just do that. And so yeah, that's what we're going to do. Let's just quickly look at the summary table, and that's the end of the section. Okay, so there you can see the summary table and trade plan. Guys, I want you to print this out now. Maybe you can go through it with me when I do the video, and I'm going to look at the same way I did lots of composites. I'm not necessarily going to do a whole year, but I'll see how much you know, I do this quite late at night now. I'm going to go to sleep and see how I feel in the morning, and I'll basically identify loads of these with you. In the same way that you did the composite, I then in this task want you to just go through and identify. And I hope, look, at the end of the day, I used to trade the dome on its own. That's why I did live trades on the dome and stuff like that. I didn't just sit here taking trades of VWAP. That's ludicrous. Of course not. You know, at one stage, I'm going to show you my chart. That's why I just want you to do the scrolling, you know, rather than taking trades of it for now. Don't do that, because that's not how I trade, right? I don't just sit here looking at a day VWAP, one chart, and just taking trades of that. No. It's one of about 12 different investor perspectives. So it doesn't make sense. When the time's right, yeah, I'll show you my full prep and stuff like that. But now's not the time. I'm building you up towards that, okay? I'm sure you appreciate that. You don't want me to just throw 13 different investor perspectives at you. It's going to be too much for you guys. So let's build it up one by one, which does involve you having to build profiles, go back, scrolling, do a lot of like scroll back type of work, and it's fine. It's good for you, okay? See it for what it is. It's really, really good. It will develop your understanding in a non-trading environment. Then you can really build it without pressure and stuff. So print this off. Okay, so we're going to go through, like I said on the previous page, the balanced environment. We're going to try and identify that. I want you to identify that. I already said, you know, the way that you would trade it is obviously fading the extremes, typically the second standard deviation, imbalanced, and actually I want you to, I've put your market condition and rhythm, and actually I want you to identify the rhythm here as well. Even though I haven't put it here, I do want you to confirm the rhythm in a balanced environment. Then we've got imbalanced, again, confirm the rhythm, mention that, fast trend, normal trend, first standard deviation, 1.5 on the fast. Slow trend is 0.5 stroke VWAP, okay? And then the reversal days, obviously, where we go from imbalance to balance, which I've also mentioned. And then, you know, I've already talked about this. You can exit your imbalance trade, or you can initiate on the break, basically, of that rhythm, going back into balance. Okay, and then finally it's the breakout, which is just really doing the opposite. So you've got your balance. Again, identify the rhythm even here on a reversal day, because you may have started off in fact you would have started off right imbalanced, and I'm happy for you to call it trend if you want. It's fine, because I do call it that when I talk about the rhythm. Identify the rhythm, start early in the day as well, and here as well. And then this is where the balance fails, and you know, you've got your options: exit the range, fade the 2SD fade at loss, and if you can, get in on the breakout like we already discussed. All right, I hope that was really helpful for you. That's pretty much VWAP covered. We're now going to get very, very practical with VWAP, and obviously we're going to look at it. So what we'll do is we'll do that, and then I'll probably talk to you as it stands. Probably just need to cover off obviously acceptance, because I talked about rhythm a lot, and then we'll basically try and combine everything that we've learned so far, and then obviously consolidate, and then essentially, yeah, there's a few bits and bobs left, like with the other VWAPs, and looking at different investor perspectives, bringing them in. But yeah, great job so far. I'll see you when we go onto the charts. Cheers, guys.